Bitcoin has done something in May that it couldn't do for 3 months straight. It has broken through resistance that stopped every single rally dead in its tracks. And the bulls are celebrating. But here's what most people aren't asking. Is this the real move? Or is this exactly what a bull trap looks like before a deeper correction arrives? Because we have a view, and it's not what the crowd is saying right now. In this video, we break down the full Bitcoin picture, the key levels, the warning signs, and the one zone where everything could change. The next few weeks on Bitcoin could be defining. Are you watching the right levels? Let's get into it. The most significant highs and lows on the Bitcoin chart at the time of this video on 12th May 2026 are the following. The all-time high at $125,761 made on 6th October 2025. The lower highs made on 5th December 2025 at precisely $99,000 and 14th January 2026 high at $97,900 respectively, and the current structural low formed at $60,000 on the 6th February 2026. In addition, we're in a weekly downtrend which is still structurally intact. We now have some context to understand this current price action. Let's now focus on drilling down into 2026 price action. The beginning of February 2026 produced just 4 bars from 3rd February high $79,136 to 6th February low at $60,000, just 4 bars that dominated price action for 3 months. We see from the yellow box that every attempt to break out of that range and sellers stepped in to push buyers back in. Additionally, as April reached its high, we not only had the yearly midpoint resistance at $78,950, we also had a Fibonacci resistance zone preventing price from going higher. That is, until this month, the month of May, which finally broke through the midpoint and Fibonacci resistance is sitting above the old resistance. Since the 6th February low, we have been working within a price channel, and currently we are at the peak of the channel. Just like when price hugs the upper band of a Bollinger Band, that doesn't mean that price will fall from here. But if we look at the recent price action, every time it has hit that upper band, we have had some reaction. Price is currently around $81,000, so this is something for us to watch for at these levels. I'm sure many of you will be familiar with the trading phrase, support becomes resistance, and resistance becomes support. So we left that old Fibonacci resistance zone on to explain what may happen next. We have the yearly midpoint, we have this old Fibonacci zone broken through, and we have the April highs. These 3 factors might be strong enough to hold up price this time around. A shallow pullback and we may see price resume higher. For us to say the bulls are still in control, what we are looking at if we are to have a pullback is that price shouldn't break the 29th April low and should remain above the 2026 anchored VWAP, which is around $73,000. These are price levels you want to be watching on the downside. So we can fall from $81,000 to $76,000 and still be bullish. If we now layer on our Fibonacci, we have some leeway for Bitcoin to move either side. Our Fibonacci resistance zone sits between $92,801 to $93,539, and our Fibonacci support zone sits between $63,360 to $63,714. We've been long on Bitcoin since 12th April after we received a buy alert from our proprietary signal. I just want to mention something on our indicator. An alert is not an entry. We have rules and filters to ensure that we only take high-quality trades. So, if you see a red or blue triangle, this is not an entry, it is an alert. We have setup, trigger, entry, manage. No trigger equals no entry. So, I hope that clarifies. We have signals and we have trigger rules for entries and exits, and this is all within the framework of risk and money management. One of the filters we sometimes use is the Ichimoku chart, and we see a TK cross confirmed to our buy alert on the 12th May. And you will also notice the Chiku span, the solid orange line, went above the clouds in the beginning of March. These are all confirmation signals. We now have the drilled perspective, but we want to zoom out again And what I'm going to tell you is all covered in our last Bitcoin bigger picture analysis. The link is above and in the description for you to check out. It is our view, as we explained at the beginning of this month, that we are in a wave B of an ABC correction, and this current rally is part of a bull trap playing out with a deeper correction ahead. Here's what it looks like. Wave A took us from the all-time high at $125,761 to the structural low at $60,000. This is a low you want to watch hold or break. Our current structure is in the Wave B rally phase, and we can see when we had the steep and fast decline, which actually occurred on the 28th, high price left no support. This means on the way up, there is no resistance, which allows Bitcoin to keep pushing higher. We have already stated that our current long position, we would want a safe exit around our Fibonacci zone between $92,801 to $93,539. That doesn't mean price will stop there and reverse. As you can see, there is the 2025 anchored VWAP and also 14th January high. This could well be a magnet for prices to be sucked into. What might cause this, we don't know, but what we do know is that the Clarity Act may be passed as early as June that can be perceived as very bullish for Bitcoin as institutions get the green light in the crypto space. Now, without going over explanations again, if you want to know our downside price targets, you can watch the video entitled Will It Drop? So, you now have the key levels and structures we are watching closely. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next video. Thanks for watching, and we'll see you in the next one.